You know, occasionally I get an email from my students and subscribers, which when I read that email, I immediately know that this is worth discussing. I immediately know that this could become a multi-part video series because the email is so well thought out and so detailed. This is one of those emails. Okay, so this is written by Siddharth Patel. One thing I would like to mention here is when you send me an email, in the signature, don't mention your mobile number. I don't want to show your personal details to other people. So your email ID cannot be seen here because this is the Mac OS system. Your name will come. Your mobile number should not be there. Okay, it's just your name and location. That should be more than enough. So this is what Siddharth Patel writes. And by the way, I'm going to discuss a stock in this video. So please read my standard disclaimers in the description of this video. All of my content is for educational purposes only. So Siddharth Patel writes, swing trade in Minda. So the stock in discussion, under discussion here is Minda. And this was sent yesterday, 11 o'clock. So let me expand this email. Okay, so what he said, Namaste Rohit sir. I want to share my recent swing trade in Minda with you. So now the moment he says swing trade, you automatically know that he has bought into a company which may or may not be fundamentally strong. For those of you who have been following my channel and my orange trading system, this is the system that we will be looking at, the orange trading system framework for swing and positional traders. We will look at what Siddharth has done in this trade and we will map it to this framework because this is what I am following, this is what Siddharth is following, right? So I want to share my recent swing trade in Minda with you. This trade is still on, so is still in the trade. That's why I told you, please read my disclaimers. This trade is still on. I have not taken this trade. My subscriber Siddharth has taken this trade. And all of this is for educational purposes only. Don't treat this as a buy sell recommendation or some investment advice or something. Just try to understand what is happening here and then learn from it. This trade is still on, but I sold 50% of the initial quantity. The details are as below. So he sold 50%. So let's assume that he bought, let's say 100 shares. Okay. Out of which 50 are sold. So we'll find out why that happened. Why did he sell those 50 shares? And I think this could become a multi-part video series because this includes stock selection. This video is also about trade management. This is also about risk management. This could also become about trade execution. So I don't know how many parts this could become, at least 2 parts. This is the first part. And in the first part, I would like to cover the stock selection. I would like to see whether the stock selection was correct or not in the first place. If the stock selection itself is not correct, then what is the point in getting into trade execution and trade management? Okay, so the details are as below. Market is in uptrend as per market Smith, so swing trade is allowed. So let me explain to you what he's trying to say here. So you go to the homepage of Market Smith, scroll down. You see market is in a confirmed uptrend. From 17th October till now, the market is in a confirmed uptrend. And in a confirmed uptrend, we are allowed to take swing trade and positional trade. In uptrend under pressure and rally attempt, we only take positional trades. In downtrend, we don't take any fresh positions. In fact, we reduce our exposure to the market. Now, these are labels given by Market Smith to the market conditions. But basically, this tells you what is the risk in the market. So confirmed uptrend means the risk is relatively lower than what it was in uptrend under pressure. So you could get into swing trading. Swing trading is where you don't demand that a stock be fundamentally strong. Okay. In swing trading, as long as the liquidity, comparative market, and technical are in your favor, we could afford to take some additional risk because there is momentum in the market. The overall market conditions are improving. So even the stocks that are not fundamentally strong could start to go up. So the overall risk in the market goes down when the market is in a confirmed uptrend. Risk is relative to the previous market condition. There is no absolute definition of risk. You still have to manage, control your risk. So that's what he's talking about. He's talking about market condition. So this is his identification is correct. He's allowed to take a swing trade. So this statement is correct. Next, from the automobile industry, group rank is 33 and RS rating is above 80, forming a good base. So technicals is good. So now in this single statement, he is covering comparative and technical. So in comparative, he's talking about RS rating and industry group rank. So let's go to Market Smith. That's why I said this is part one. It is going to take some time for me to show you everything. So let's write Minda. Okay, this is the stock. You see, I'll click on consolidated now. You see this price strength is 83%. See, price strength is 83. It's not percent, it is ranking. Okay, price strength rating, not it's not even ranking. I would say it is a rating. Okay, price strength is 83. We want it to be more than 80. This is fine. Group rank is 30. We want it to be less than 40. The smaller the group rank, the better it is, right? So 30 is fine, 83 is fine. That is what he's mentioning here. Group rank is 33. So when he bought the stock, at that time it was 33, maybe 2-3 days ago. Now it has improved. Forming a good base, so technicals is good. So now from comparative, he's talking about technical. So he's saying it's forming a good base. And I don't know what he means by a good base. So let's look at the chart. So let's go to Minda. So he's saying it's forming a good base. So he's talking about this base. Okay, here. As you can see here, that's the 52-week high. So let's draw that base. So nice base formation here, see. But can you immediately see what is the problem in the base? The moment I draw the base, if you are my student, if you are my subscriber who has spent some time with me on my channel, you will immediately know what is the problem in the base. What is the problem in the base? No green zone closing. Look, see, whenever the price tries to enter this green zone, it is pulled down. Why? Overhead supply. See, the guys who have bought the stock here in this green zone, they had bought the stock in October. Now we are in December. So October, November, it's the start of December. The people who bought the stock in this area, they are sitting on a loss for almost 2 months. So they are frustrated now. So the moment the price tries to enter the green zone, it is pushed down probably by the supply that came here. See the supply, see the demand that came here, the price was pushed up. These guys are sitting on a loss for 2 months. So the moment the price will enter here, there is a good chance that the supply coming from these buyers might overwhelm the buying demand coming from here. Now, if the buying demand overwhelms the supply that is coming from here, the stock is likely to go up. But what if the supply overwhelms the demand? So it would create candles like this, where it's a green candle, but it's a weak closing. Weak closing means closing below the midpoint of the candle. It's because of overhead supply. So this statement is not correct. forming a good base, yeah, the base is good, but the technicals is not good. Okay. It's not, I would say the technicals would be average. See, the price is hanging around in the blue zone. It's not spending time in the green zone. We want like 4 to 5 closings inside the green zone so that we know that this supply is getting absorbed. Okay. These are the basics that you have to know. These are the minimum viable basics that you need to know as a professional swing and positional trader. Fundamentals are not the best. Okay, after tax margin is declining. So let's go to fundamentals now. Let's go to just so I click on consolidated. Don't forget to click on consolidated. Now fundamentals, look at this. The EPS growth rate latest quarter, not 40% or more, and it is declining from previous quarter. So two violations here. The latest quarter sales growth is not 25% or more, and it is declining 19, 18, 13. So four violations here itself. Okay. The return on equity looks okay, 17%. We need minimum 17. Earning stability is fine. We need 25 or less. EPS growth rate is fine. We need 25 or more. Now, one problem is here is the annual EPS is more than quarterly. That should not be the case. We want quarterly to be more than the annual because quarterly shows the current situation in the company, right? So five violations, four violations here, one violation here. So total five violations. Look at the annual EPS, 11, 15, 16, 3 consecutive years of growth. Fantastic. This is very good. And the annual EPS is at an all-time high. This is very good, right? These are the kind of companies that you should concentrate your attention on. Why am I saying this? Now, look at Minda, 11, 15, 16. 1.9, 5, 2, 3, 6, 11, 15, 16. It's growing. Since 2020, it's been growing consistently. But have a look at companies like Paytm. Okay. Now, forget about profits. Look, minus 295, minus 735, minus 487, minus 281, minus 38. Not a single year of reported profit. Okay, not a single year of reported profit. Of course, the loss per year is reducing, which is why the stock has been going up. Okay, so investors could be anticipating a profitable year ahead and profitable years, multiple years ahead. That is why the stock could be going up. But somebody like William O'Neill would not even look at this stock because if a company has been reporting losses for so many years, first it will have to earn that much amount of money just to break even. Imagine this is thousands of crores of loss. This is earnings per share, by the way. Okay, it's not in crores. This is earnings per share in rupees. So not a single year of reported profit. So we must focus on companies that are profitable and the profit is increasing. Okay, that is where you increase your odds of success. I am not saying don't put your money in Paytm. I am not saying don't buy Paytm. I am not saying don't sell Paytm. I am just saying that the risk in Paytm is more than the risk in companies where the company is profitable and the profits are increasing. Okay, so overall five violations. And then we come down to after tax margin. You see, latest is 5. Previous year it was 5.26. So it has gone down from 2018, 2019. You see 5.42, 6.88. It's gone down. So it's not at an all-time high. So which means total 6 violations. Now we need minimum 7 out of 12 of our criteria to be met. So his analysis is correct when he says fundamentally not the best. He is right because out of 12, I have found out that there are 6 violations. So this is a swing trade. This is not a positional trade. For a positional trade, we need minimum 7 out of 12 to be met. I hope you know what is the 12. What are the 12 fundamental criteria? If you don't know, then there is a positional trading playlist that I have created. on my YouTube channel. There are 50 videos in that. If you watch that, one of the videos will be about fundamentals. So take the time, spend time on my channel. You will learn a lot here. After tax margin is declining, fine. Fundamentals not the best, fine. Sales growth less than 25%, fantastic. So decided to go for swing and not a positional trade. Look at this, fantastic analysis. This is not some beginner. Okay, Siddharth Patel is not a beginner now. Now he has become a professional. Now his approach is very systematic, methodical, professional, and granular. Let me repeat that. The approach of Siddharth Patel is systematic, methodical, professional, and granular. It is not a superficial approach to picking stocks. Okay. He understands exactly what to look for. He knows this model. He knows this model. He's applying this model. He knows exactly what to look for. He knows what he's getting into. He knows that this is a swing trade, is not a positional trade. What does that mean? He knows that he will have to manage risk. And he has done that. Why? How? By selling 50%. Probably he saw some risk. We will discuss that in part 2. Okay. 7 points in the base. Now, this is something which we will discuss in part 2 of this video, because now we are talking about the technicals and the drawing of the points in the base. So let me take a break here. Okay, let me have some water, maybe some coffee, and I will make the next video. Okay, I will publish one video every day. We will get that video tomorrow. But let's go step by step. At least till here, so far so good. Looks okay. So it looks like, just by reading these 3 statements, it looks to me like Siddharth Patel is following a proper approach. I don't know whether he is my student or not, whether he has enrolled in my video course or not, or he's just a subscriber. I don't know about that. He's not mentioned that in the email. But what I understand from the email is this is a very good approach towards looking at a stock. Imagine using this approach towards every stock that you look at. Don't you think that your trading, your process, your trading, your discipline will improve? I think it will. Thank you so much. I will see you in part 2.